Good morning, investors and traders. This is Naeem Azam live from London with a wealth of over 10 years of trading. And I've worked for big institutions like Bank of America and Bank of New York Mellon as a hedge fund trader. And today I'm here with you to explain a little bit more about the stock market, what exactly is going on in markets and what is really driving the markets. And more importantly, if there is an opportunity in this particular market. Now, when I look at the European markets, yes, they are trading to the downside. And I'm speaking when we say the European markets, by that we mean the DAX, which is your German index, the CAC, which is your French index, IBEX, your Spanish index, and Stoxx 600 and Stoxx 50, which represents the whole of Europe. And of course, in the UK, we have the FTSE 100 index. All of these indices are very much trading to the downside because investors are concerned about surge in coronavirus cases. Because remember, this surge in coronavirus cases led to a national lockdown. Remember, back in March, we've seen everything closed. Now, yesterday, we've seen this another sweeping change by shops are closed for the next 6 weeks. The fear is, what if other European countries will also adopt a similar strategy? What if they do exactly that as well? And if that happens, what does it really mean for the equity market? How low this equity market is really can go? Well, if we do see another national lockdown among other European, because remember, massive sell-off across all the European markets. The DAX dropped massively, the CAC dropped massively. Similar scenario can really play out over here as well, because we could see if a national lockdown is announced or if national lockdowns are announced within Europe, we can see all these indices moving massively lower. And that is the opportunity right here. We can keep an eye on these coronavirus cases if and implemented. Now, over in the United States, what we're really looking at is the hope on another second stimulus. Because remember, the House Speaker, Nancy Pelosi, she promised that today there will be another stimulus package. So this was a self-imposed deadline in sort of another promise, which I've mentioned earlier. Now, it is highly unlikely, in my personal opinion, that it is going to happen before the US election. I think, yes, second stimulus package will eventually see the daylight, but that isn't going to happen before the US election, because we're talking about a time period of less than 2 weeks. And then these second stimulus talks have been going on for over 3 months. We've been looking for another stimulus since September, and where we are now, we're in October. So literally over 2 months, or let's just say 3 months nearly, that we are talking about this second stimulus. So how are we going to see another one? Nonetheless, the important thing to pay attention is, if we do get a positive news, because never say never, then the US stock market, and by that I mean the S&P 500 and the Dow Jones, they can move massively higher. Currently, the Dow Jones and the S&P 500 indices, they've started to move back to the downside. They are very close to their 50-day moving average, smooth, simple 50-day moving average on the daily time frame. Now, of course, as long as the price stays above this, we are still very much confident that the price will continue its journey to the upside. But in terms of an opportunity, if the price goes back to the 50-day moving average, the simple 50-day moving average, there could be your opportunity to get back into the trade if you're not into the trade. But if coronavirus cases continue to surge, which they are, and we don't get another stimulus package, the chances are not the sell-off can really happen, meaning you can really sell these markets to the downside and really expect some major fruit for your labor in terms of this particular trade. But one particular derivative or asset which is quite intriguing today for this particular video is oil. What is happening with oil prices is the 50-day simple moving average has fallen below the 100-day moving average. Why that is important? If that is your question, then I can explain you this one fact, that the last time it happened was back in January and February. Remember what happened at the time? Oil prices started to crash. We went in negative territory. I'm not saying we are going to go into a negative territory. What I'm saying is there's a probability for lower oil prices. But currently, the oil price, and I'm speaking of the crude oil price, is in battle with 100-day moving average. It is trying to stay above that 100-day moving average. If it stays above it, great. Otherwise, the price is above the 50-day moving average anyway. So if it breaks below that, it's going to go back towards the 50-day moving average, meaning price can drop all the way to $37 to $38. That's all for today. I'll see you guys next time.